Hi, this is Kiri from Bobsled Marketing. One of the most common questions that we get from non-US individuals and companies is around the tax implications of selling on Amazon. Companies located outside of the US need to understand the federal income tax, state income tax, and state sales tax implications of selling on Amazon. And there is a lot of conflicting and confusing information out there. Well, we're definitely not tax experts here at Bobsled Marketing, which is why I called on US tax attorney Stewart Patton from ustax.bz to shed some light on the matter. During this interview with Stewart, we dive into these questions. For brands which are already established in non-US markets, what kind of US entity, if any, should they be setting up for their Amazon distribution? Are non-US individuals or entities who are selling only on Amazon.com subject to federal income, and state sales taxes? And how about if the company also has other distribution in the US, like selling through an online store? And finally, I asked Stewart how he sees the tax system evolving as it relates to e-commerce and Amazon in particular. Stewart is a US tax attorney and expat living in Belize, and a lot of his work usually focuses on US nationals living abroad and doing business abroad, but he also knows a lot about non-US nationals and entities who are planning to establish a presence in the US and particularly on Amazon. So I wanted to really dive into Stewart's experience in a lot of these topics. So welcome, Stewart. I just wanted to before we get into specific questions, I just wanted to get a little bit of background on you. What do you do and what's your specialty?
Okay, great. So I'm a U.S. tax attorney, and I live full-time in Belize City, help expats and digital nomads, and also non-U.S. folks selling into the U.S.
Okay. And so I bet in the last couple of years you've seen a lot of interest in Amazon and sellers who are looking to expand on Amazon from outside of the US. And that's actually the reason why I wanted to get in touch with you, is that there's been some really good content you've put together for non-US companies and business owners. So have you seen a lot more interest in that business model in the last couple of years?
Yeah, absolutely. I mean, Amazon FBA has just really taken off. Amazon has just created a great platform to access the U.S. market. So it definitely makes sense for non-U.S. brand owners to want to get on board with that.
Right. And so that's what we're talking about today is really about non-U.S. entities and individuals who are looking to start selling in the U.S., particularly through Amazon, and what kind of complications that can bring up from a tax standpoint. So I guess my first question is, for brands that are already established in non-US markets, what should they be setting up a US legal entity like a corporation or an LLC? Is that something that is advisable, or is it necessary? What's your perspective there?
Yeah, so there's definitely no U.S. tax reason to set up a U.S. legal entity. Okay, there's no U.S. tax benefit to doing so. And if you do it incorrectly, then there would be a significant U.S. tax detriment to doing so. So the reasons I see some non-U.S. sellers wanting to set up a U.S. entity are for non-tax reasons, mainly because they want to bank in the U.S. And I think the main reason for that is to avoid multiple exchanges of currency when you're taking, through the money life cycle of getting payments from customers, and then maybe converting it into your home currency, and then maybe converting it again into your supplier's currency. And so there could be costs all along the way, and some of those can be avoided by having a U.S. bank account. And then I think some people just feel that banking in the U.S. is works better, is maybe safer than banking in their home jurisdiction. So banking in the U.S. typically requires having a U.S. legal entity. If you walk into a bank in the U.S. and say, "Hi, I've got a Romanian corporation or whatever, and I'd like to open a bank account." Well, if you have a couple of $1 million that you're going to put in that bank, then they'll be happy to open an account for you. But otherwise, the bank would say, no, we open accounts for U.S. legal entities, not non-U.S. legal entities. So
absolutely. I actually used to be a commercial banker, so that was a pain point that we experienced a lot, is international businesses coming in, and it's absolutely impossible at this point to be opening a US bank account without a presence, without at least an ITIN, an international tax identification number. And I guess that's the other reason why you would set up a US entity, right? Is if you did want to get an employer identification number for some reason. But as you say, it's not necessary. Certainly from Amazon's perspective, it's not necessary to set up a US entity or be a US person to be selling on Amazon.com.
Right.
Great. So that's a situation that we see quite frequently at bobsled marketing, is that brands will be selling to a distributor or maybe selling to retailers already in the US, and then they want to take the next step and start selling directly to consumers. And so I guess kind of a follow-on question from that, if brands are selling, if their only direct consumer distribution channel in the US is through Amazon, where do things land from a sales tax standpoint versus an income tax standpoint? So in the US, depending on which state you hold inventory in and different relationships that you have in each state, then that may or may not qualify you to need to collect and remit taxes to the state government. So I know this is like an evolving topic, but I wanted to get your perspective on state tax versus US federal income tax for non-residents.
Yeah. Okay, well, that's a big question. I don't know how much time you got. Sit, get comfortable. But let's do things in order. And I like to think of it as kind of three taxes. There's U.S. federal income tax, there's state income tax, and then there's state sales tax. Okay, so let's do those in order there, and then we'll tie into the previous discussion too, and talk about if you do use a U.S. entity, what type of U.S. entity you should use. So let's do U.S. federal income tax first, because it's kind of the easiest and also kind of the most difficult. But so I believe that if you are a non-U.S. Human or legal entity, and your only activity in the U.S. is selling products on Amazon FBA, then you are not subject to U.S. federal income tax. Okay. If you start Googling around and reading about this on the internet, you will find tons of people that say differently than that, and that say that you are subject to U.S. federal income tax. And I believe those people are wrong, and I'll tell you why. But the thing about this to remember is we are talking about how the law applies to a set of facts, and so that calls for an opinion. So it's a subjective determination made by a human. It's not the same thing as asking, well, what's the temperature of this glass of water? So there's no thermometer we can stick into this question. It's an opinion, and so there are different opinions. But I'll tell you why I came to my opinion. So real quick little civics lesson here, like a little political science class. So in the U.S. In the U.S. federal government, there are three branches of government. There's the legislative branch, and they come up with a statutory law, like the U.S. Code. And then there's the executive branch, and they enforce the law, and they come up with things called regulations that further refine the statutory law that Congress came up with. And then there's the judicial branch, and what they do is whenever taxpayers, in the case of tax, want to fight with the government, then the judicial branch decides who's correct. Okay, so let's say you're trying to figure out is a non-U.S. seller on Amazon FBA subject to U.S. federal income tax. So the first thing that you do is you open the Internal Revenue Code. So that's the legislative branch. That's the laws that Congress came up with. You open that, and it says, if you are a non-U.S. person and you are engaged in a trade or business in the United States, then you're subject to tax. The problem is that little part, engaged in a trade or business in the United States, it doesn't actually define what exactly that means.
It's pretty broad.
Yeah. It does have some rules where it says you're not engaged in a trade or business in the United States in specific circumstances, but those don't really apply here. Okay. So then you say, okay, well, the code is no help. Let's go to the executive branch and let's see what the IRS, the Internal Revenue Service, has said in the Treasury regulations, which are the rules that the IRS puts out to interpret the Internal Revenue Code.
Right.
Well, you look through there, and there's a little more guidance. There's some more specific examples of when you are not engaged in a trade or business in the U.S., but there is still no, fulsome outline of when you are and when you are not engaged in a trade or business in the U.S. So whenever the law is in that state, what happens is that people fight with the IRS. And so over the years, there have been a bunch of court cases where the IRS said, hey, you are engaged in a trade or business in the U.S. And the person said, no, I'm not. And so then they fought it out, and a court rendered their opinion. So that's why the state of the law here is so complicated, is that it lives in a bunch of case law. And a lot of that case law is from like the 1920s through the 1960s. Right. So you can imagine the sorts of businesses, So determining how the law works in this area is complicated. You have to distill principles from a bunch of case law and then apply those principles to facts that are somewhat like, but a lot unlike those cases. Mm-hmm. So that's one reason why you read bad information on this topic. And then another thing is that there are lots and lots and lots of tax professionals out there, okay? And tax is a huge, broad area.
Yep.
And not every tax professional can be an expert on every single area. Mm-hmm. So like, for example, just last week I was talking to a client of mine who lives in the U.S., has some investments in Belize. Their tax professional just had not been reporting those investments correctly, didn't know how to treat non-U.S. investments. But this person lives in a farming state and has a farm. He's a farmer. And so his tax professional knows all sorts of stuff about farms. And there are all sorts of little exceptions in the code that I've always seen, like as I'm researching something or as I'm working on something. But I don't know how that all works. I don't know how the farming. And if a farmer walked into my office, I would never try to help them with their tax situation. I don't know anything about it. Okay, so that's kind of the framework for how to think about the analysis. So I guess let's jump into the analysis. Okay. Yeah. So a non-U.S. person is subject to U.S. tax on business income only if they are engaged in a trade or business in the United States. Okay. So that means that you have to have some people on the ground in the U.S. who operate your business, and they have to be your people, not just
contractors.
Exactly, not just somebody else's.
Okay.
So that's basically the two requirements. So a non-U.S. person is engaged in a trade or business in the U.S. only if they have at least one dependent agent on the ground in the U.S.
Right.
And that dependent agent does something substantial to further the business of that non-U.S. person. So not just something administrative or ministerial, but something substantial to further the business.
So if you engage with a distributor who's independent, then that would not be engaging in the U.S. in what was the definition again? Engaged in a trade.
Engaged in a trade or business in the United States.
Okay.
A short way to say that is ETBUS, ETBUS. So yeah.
Okay. And so likewise, things that would be excluded from that definition are third-party fulfillment centers who you ship your inventory to, and then they pick, pack, and ship the orders and send them out to customers for e-commerce. Yep. Distributors or wholesalers that are selling onto retail stores, or
That's exactly
Amazon.
Right. That's exactly right.
Okay.
Yeah. When Amazon wakes up in the morning, they're not trying to sell your XYZ brand of water bottle. They're trying to make sure that goods flow through their warehouse and that their website works correctly and that their payment processing gateways, all work correctly. So Amazon is engaged in their own trade or business, right? They're not engaged in your trade or business of trying to sell your brand of water bottles or whatever. So that's the key. So if you're a non-U.S. person, you have a brand of water bottles you're selling, you are definitely engaged in a trade or business. You're doing business. You're sourcing products, you're advertising them, you're doing research and development, you're doing customer support and stuff like that. But if you do that from outside the United States, then you're not engaged in a trade or business in the United States.
Okay.
You're engaged in a trade or business wherever you happen to be.
Yep.
So.
Okay. And so as it pertains to state sales tax, what's your opinion there?
So let's move to state income tax,
Yep.
okay? Now, the result is going to be the same, that state income tax is not owed. The way to get to that result is very slightly different, okay? So the U.S. Constitution imposes limits on a state's ability to impose its income tax on a person, okay? And so that person must have a certain nexus with the state in order for the state to legally be allowed to impose income tax on that person. Mm-hmm. So, each state has different rules on when a person has risen to the level of having a nexus with that state or not. But those rules are within the context of the limits imposed by the U.S. Constitution. So basically, if you're sitting outside the U.S. and you're just lobbing your product into the U.S. on Amazon FBA, that's not enough activity in any state to create nexus in that state for income tax purposes, okay? Mm-hmm. And then, even if it were, if you look at a state tax return, how it typically works is the first line is your federal taxable income, mm-hmm. and then you do some adjustments to arrive at the state taxable income, and then you apportion that income to the various states where you have nexus with. Mm-hmm. Okay, so here, even if you were subject to tax in any state, the first line would typically be $0 because you don't have any taxable income for U.S. federal income tax purposes.
Okay. So we're about halfway through the interview with Stewart. I don't want you to go away. Coming up, we talk about U.S. state sales taxes and what the requirements for non-U.S. companies are right there. I just want to give you a quick tip, which is to subscribe to the Bobsled Marketing channel on YouTube. Each week, we share a week in review roundup of Amazon news and updates, as well as topical information about how to get the best mileage out of selling on Amazon. Just click subscribe and you'll get notified of new videos as they come out.
So state income tax, same result. You shouldn't owe any state income tax. Slightly different in practice because states are typically more broke than the federal government is, and so they're maybe a little bit more likely to actually go after you, mm-hmm. If they take a different interpretation. Mm. So let's look at the last thing, state sales tax. Okay, now this one's a little more difficult. So analysis is pretty much the same as state income tax. You must have a certain nexus mm-hmm. with a state in order for that state to be constitutionally allowed to require you to collect sales tax in that state. However, that nexus requirement is a lot lower than income tax. Okay, and so a lot of states take the position that simply holding your inventory in their state is enough activity in that state to create nexus for sales tax purposes. Okay, now this is a new and untested argument by states, and so it's kind of like, you can think of it from a different perspective. If you want to kind of hold your guns and say, I believe that states are overreaching and are, really cannot collect sales tax when I only have inventory there, you can take that position if you like. However, sticking to those guns may require you to go to court, maybe federal court, maybe several courts, maybe several years, and paying lawyers a whole bunch of money. And so what a lot of people do is once your sales get up to a certain level, then you kind of say, okay, I gotta get some help here and actually start collecting sales tax in these states.
Because there's that risk reward payoff, right? And my understanding is that at least in some states that the look back period is indefinite. So they can go back as far as they want to. If you've been in operation for 10 years in the US, they could go back since the beginning of your business. And so all of the revenue that you've accrued over that 10 years is subject to sales tax. And if you haven't been keeping records, then they just make their own assumptions about what that would be.
Yeah, exactly. So it's one of those things where if you're just starting out and you sell $60,000 worth of product into the U.S., well, a state's not gonna bother you, But if you're more established and you're selling $100 million worth of product, well, yeah, you gotta make a decision, really. Either stick to your guns and fight these broke states that are going to come yapping at you, or just collect the sales tax.
Yeah.
Unlike VAT, sales tax is something that is collected, so it's a pass through. So you sell a product for $100. If the sales tax is 5%, you collect $105 from the customer, and then you pay $5 over to the state. Right. So it's not something that is increasing the price of your product. Right. So the cost is not the sales tax itself; it's the administrative cost. And then there are good services now that take care of that for you.
Yeah, there's some software programs that float between your shopping cart and also Amazon. They just automatically go in there, and then they calculate how much tax is due in each state, and some even file those returns for you with the state.
Yep.
Yeah. So you brought up an interesting point about VAT versus US sales tax, and it can be a crude comparison to try and explain to someone who's familiar with the VAT but not with state sales tax in the US that it's kind of similar. It's a consumption tax essentially, but how else would you differentiate the two concepts to someone who's not quite so familiar with US state sales tax?
Yeah. So, well, first of all, there's the certainty of the application, right? So if you want to sell in Europe, well, you got to register for VAT in each of the countries you're going to sell in, assuming you're over the threshold for that country. And you just got to do it. And you got to, and there are lots of services you can pay to do it. And it's not that big of a deal, and everyone does it. And so, whereas in the States, you kind of have this initial question of, do I do it or do I not? But once you get over that hump, then the real difference is that that you kind of don't pay sales tax. You only collect sales tax.
Okay.
It's an amount that's added on above the price of your product.
Right.
Whereas VAT is just something that if you're charging $100 for your product, then you better have figured in the VAT you have to pay into your pricing, right? Because you're not. If VAT is 10%, you don't collect $110 from your customer. You only get the $100, and then you got to pay 10. You got to pay 10%.
Okay, got it. So, that's a good explanation.
So it comes out of the seller's hide, really. So a few years ago, it was really a mess because there weren't software services and so it's kind of like, oh, geez, how in the world am I going to figure out how to fill out a piece of paper and send it to these states and collect? And on the U.S. federal income tax side, there's also a different way to think about it for people in high tax countries versus people in low tax countries. So if you're in a country where you're paying 40%, 35% on your income, and you get a foreign tax credit for income tax you pay to another country, then like if you're doing something beyond Amazon FBA, or you have your own people in the U.S. maybe that you're worried about, maybe you're engaged in a trade or business in the United States. Well, if you go ahead and pay U.S. federal income tax, then you should get a credit against the tax in your home country. And so again, it's kind of like the sales tax analysis, where you're not there are no more dollars going out the door to pay tax. There are just more dollars going out the door to pay administrative costs, like to actually get those returns filed. So even on the income tax side, there can be different ways to think about it depending on your facts. But again, you would need a tax advice in your home country to make really sure that you do get a credit on a current basis for the U.S. federal income tax you pay. But then if you're in a country where you're not paying tax, or you're in a situation where like you're not tax resident in any country or something like that, you want to make sure that you don't have your people in the U.S. and you want to rely on not being treated as engaged in a trade or business in the U.S.
Got it. Okay. And so how do you've been in the industry for a while. I'm sure you've seen a lot of changes over the years. What do you kind of see coming down the pipe as it pertains to non-US businesses engaging in business in the US, particularly in retail and e-commerce?
Yeah, I don't know. That's a good question. Honestly, the law could change with respect to U.S. federal income tax. It would not be that difficult. Like you can imagine like 60 years ago, if you're a non-U.S. company and you're shipping goods into the U.S., well, the U.S. has no way of tracking that, and so if they try to impose an income tax on you, it would be impossible to catch you if you didn't file. Well, now with Amazon FBA and with Amazon's got all the numbers, right? And so there could be something where like like if you sell books on Amazon or you sell other sorts of items on Amazon, then you're required to pay a 30% tax because those things are treated differently. They are royalties as opposed to trade or business income, and so very well could be the case that the U.S. federal government decides, hey, wait a minute, why are we letting all these non-U.S. sellers get away with not paying U.S. tax when Amazon's got all the numbers and they have the money, and so we could require Amazon to withhold the money or withhold some portion of the proceeds that would encourage the non-U.S. person to file a return so they can claim their expenses and maybe reduce the actual amount of tax they end up paying. So definitely the law could change in that direction. And then also with states, they're just getting brokers, so they're just going to get fiercer.
Right. Great. And so tell us a bit about like the services that you provide to entities and individuals outside the U.S. who are engaging in business in the U.S. in some capacity.
So the main service I provide is having this conversation, making sure that on their specific facts, they're not engaged in a trade or business in the U.S., and so that they don't have to pay U.S. tax. And then other things I can do are help them unwind unwise structures they've created in the belief that they had to pay U.S. tax. Help them get tax back that they've paid to the U.S. And actually, here's something that I meant to talk about that we touched on that I didn't actually get to. We talked about creating a legal entity in the U.S. and what type of legal entity you want to create. Okay, well, each state authorizes the creation of a large number of different legal entities, but there are two main ones that people know about and potentially use. One is a corporation, and the other one is a limited liability company, or LLC for short. A corporation is subject to U.S. federal income tax on all of its income. So if you're a non-U.S. person and you're not engaged in a trade or business in the United States, you would not be subject to U.S. federal income tax. However, if you form a corporation under the laws of a state, then it would, exactly. So you created a tax liability where otherwise none would exist. So you don't want to form a corporation. You want to form an LLC. Okay, an LLC that has one member is disregarded as a separate entity from that member. So it's basically treated as nothing for U.S. tax purposes. Now, this gets a little more complicated because an LLC can elect to be classified as a corporation for tax purposes, and you don't want to do that. So you want to create an LLC, and then you want it to retain its classification as a disregarded entity. Okay. And then the structure can get a little more complicated when you have like multiple partners. You want to do the split with your partners in a non-U.S. legal entity so that the LLC is disregarded. You don't want the LLC to have multiple members because then it would be a partnership for U.S. tax purposes, and so it would have to file an information return even though there wouldn't be any U.S. tax. And so that's something I do is set up structures for people, LLCs in the U.S. and then sometimes non-U.S. entities as well if they have a partnership and they need a non-U.S. entity to be a partnership. And then also I can help with opening bank accounts and remotely. And like you said, that's becoming increasingly difficult, but there are still ways to open accounts remotely without actually going to the U.S. And So that's something I can help.
Fantastic. Yeah, thank you so much for spending some time explaining all of that. It is, as you say, there's a lot of opinions out there. There's a lot of things that you can read on the internet. But since everyone's situation is different, it's important to get legitimate advice that applies specifically to your situation. So thanks for sharing the broad strokes with us today.
Absolutely. Thanks for having me, Carrie.
Thanks,
Carrie, I appreciate it.
Well, I hope that this interview answered some of the burning questions that you have about US taxes if you're not a US resident or US company. And if you want some more information about any of the topics that we talked about today, you can visit the Bobsled Marketing blog where we have the resources and notes from this discussion. And if you have a question for Stewart, you can leave it in the comments section below or visit his website at ustax.bz. Thanks for watching, and make sure you subscribe to the channel to get notified of new videos as they come out.